Now let's dig in a bit on jobs, the economy, and whether the new tax cuts are affecting them. As we told you earlier, the jobless rate is at its lowest in 17 years, and as William Brangham tells us, the president says it's a result of his policies.
April marked the 91st consecutive month of job growth. That's 7+ years in a row and the longest streak on record for the U.S. Average job growth this year is around 200,000 new jobs a month. That's up a bit from last year's average of 182,000. And when President Trump was speaking before the NRA today, he said the tax cuts are part of the reason.
We are seeing the incredible results as a result of our massive tax cuts, and everybody is benefiting and everybody is happy. We've created 3.2 million jobs, unthought of. If we would have said that 3 years ago during the campaign, people would have said, what a horrible exaggeration. That's so terrible. They wouldn't have believed it.
At the same time, companies reported a very profitable first quarter this year. In fact, according to the Wall Street Journal, it was the best in 7 years, due in part to pre-tax profits and smaller tax bills. But wage growth remains sluggish, and there are questions about whether these profits are leading to the kind of hiring that was also promised as part of the tax law. Jim Tankersley covers all this for the New York Times, and he joins me now. So 4%, under 4% unemployment is a pretty striking milestone, isn't it?
It's great. There's no question about it. This is a great number. You want the economy to run as hot as you can without getting too much inflation, and we're there right now. Maybe we even have more room to run hot. And this is a pretty, I wouldn't say unprecedented like the president, but it's a thing we have not seen since the very beginning of this century.
Wages, though, have remained a little bit sluggish. And my basic understanding of economics is when unemployment is low and the economy is roaring, there's more competition for that scarce number of workers. Wages ought to go up. Why are they not?
Well, that's a big mystery for economists, and there's a few theories. One theory is that there's actually still not as much competition as you might imagine based on the unemployment number, because there are about 2 million people who could be working but are not looking for jobs right now. And that lack of them in the labor force is keeping wages down. Another possible explanation is that workers right now have for so long not had bargaining power with companies. They've not had the ability to demand raises, that they're having a hard time getting it back for whatever reason. Companies are just not used to paying them more, and so they're slow to react to, okay, maybe we need to do that.
So there is the possibility that somewhere down the line, wages could start to tick up.
Absolutely. It's what we would expect from pretty much any way of looking at economic theory, that if it keeps being a very low unemployment rate, if we keep creating jobs at this level, wage growth should at some point kick in. I mean, at some point you actually exhaust the number of people who are out of the labor force. They should come back in. But until we get there, we might see this subdued wage growth that we've been experiencing.
The president, as we heard, is crediting the tax bill that was signed. And he says this is the reason we are supercharging the economy. And certainly profits have been going up. And right after the tax cut was passed, we saw a lot of CEOs coming out saying we're giving bonuses out because of this tax bill. In fact, there was one Florida CEO who, I believe it was, he stamped Trump tax cut onto the bonus check that he wrote for his employees. Let's take a look at what he had to say.
I wanted to do it because I'm excited about the new tax plan from Trump and the GOP, and I wanted to share the wealth, as they say. And my employees, who are mostly Generation Xers and millennials, not particularly into politics, it really impacted them when they got in their hand a check for $1,000 that plainly said, this is why you're getting this check, because of the change in the new tax plan.
I mean, $1,000 is great. Let's not diminish that whatsoever. But a bonus is really not the same as a wage hike.
It's not. And it's also not what anybody thought, including proponents of the law, would be the natural outgrowth of a big tax cut. There's no economic theory that says when you cut taxes, people get big bonus checks from their employers. It's just a thing that happened that sort of snowballed, in part because companies got wise that the president and Republicans would amplify, oh, look at this great company that's giving out bonuses based on the tax cuts. It was a sort of a feedback loop. But that ended after a couple of months, and workers who got that bonus, which again is fantastic and more money in people's pockets is always good. In this case, they're not seeing a sustained, well, next year I'm going to get a bonus. And the wage hikes haven't really followed. But the funny thing about that is, again, we wouldn't necessarily expect that right away. You wouldn't think companies, unless they have like a union or someone really demanding strongly for them to give wage hikes from a tax cut, you wouldn't expect the company to do it on its own. You would expect them instead to invest in better equipment, in more other capital expenditures that make their company more productive. And then when their workers get more productive, they have to pay them more because they're producing more. And so in a weird way, it's a bank shot of wage growth that we're looking at, and the bank shot is not appearing in the data yet.
So is that investment that you're describing, that if they suddenly get a big windfall from this tax cut, are they plowing it? Or does the record reflect that companies are putting that money investment-wise into offices, factories, plants, et cetera?
There's not great evidence yet that the tax bill has unleashed any sort of an avalanche of investment. Investment has been higher under President Trump than it was in the end of President Obama's term. But in the first quarter of the year, investment growth was about the same as it was a year ago. So on the other hand, we've seen some surge of investment among large public companies this quarter, and that maybe gives us, plus some other survey data, some hope that we will see an investment surge in the months and year to come. But again, we don't have great evidence yet that that's happened.
Why is that? Because that was one of the huge selling points of the tax bill, that this will supercharge companies doing this exact kind of investment. Why haven't we seen it? Or is it just natural it's going to take this long?
It could just be natural that it's going to take a while. There's plenty of economists who think that these things have lags, that in particular the tax law is more complicated than just a big corporate tax cut, and so it takes time to figure out exactly all the new things and then to figure out where to deploy your resources best in response. There's also the fact that there's some instability right now in the economy, particularly from trade, and so that might be chilling investment a little bit. And then it's also true that companies have, the first thing that they have done in a lot of cases with this money is to not invest, but to buy back their own stock or to pass money on to shareholders another way through dividends.
Explain what that is. We've seen a lot of companies doing this, stock buybacks. Apple most recently, a very strikingly big buyback. For those who don't know exactly what that is, what is a stock buyback and who does it benefit?
Well, what it is a company decides that it is going to repurchase shares of its stock which are out on public markets. So it goes out, it spends money to buy its own shares. Now it controls more of its own shares. And that puts money in the hands of people who did own the stock and decide to sell it. And it also increases the value of stock held by existing shareholders because the price goes up when there's a big demand surge for the stock. Now the hope is that, by conservative economists, is that eventually the money that gets into the hands of those investors who sold will find its way into the economy through other investments. They'll take that money and they'll fund startups, or they'll buy other stock and find a way to seed new companies. But for now, what it does is, in the initial phase, it just turns into a bump for mostly rich people. I mean, the rich in America control most stock. They're the predominant shareholders. And so that is who is benefiting right now. Again, the hope is that it will ping its way through and benefit the whole economy.
Jim Tankersley of the New York Times, thanks for helping us wade through the weeds.
My pleasure.